Another option or a scenario that I talk about with clients is prices in the stock market don't need to crash. They don't need to correct. They could consolidate sideways. Another way for the stock market to digest a big move up, which is what we've experienced in 2024, is a sideways consolidation where things muddle along sideways for price while the earnings, which is the denominator in that price to earnings ratio, while earnings catch up. So there's also an environment where a sideways movement in stocks is the way for the stock market to digest the big move that we've experienced up over the last couple of years.
The other thing that, when we just look at PE in isolation too, and this is really difficult, right? But in an extreme example, the market today has much more in technology stocks than the market of the 1980s, right? So to compare historical PEs of compositions of markets that have just different business types is really difficult. And one of the reasons why you do see an elevated PE now is because of the weight towards technology. And I would almost argue comparing the PE today to a PE 20 years ago is almost irrelevant.
Or the historical. What's the historical PE? 16?
Right, which is weighted down by industrial companies from the 80s.
From 50 years ago.
Because
no sense.
Because and that's important also. When we have higher PEs, generally that's accepted when margins are higher. So profit margins being higher. Technology companies generally have higher profit margins than, let's say, GM or an auto company. Yeah. So all of these things fold into the story. And it's not just as simple as saying, is the market expensive on a PE basis, but why?
Yeah. All right, so I think we can all agree, just so we don't spend too much time on valuation, we can all agree that the price movement has been meaningful. There's an environment where earnings can catch up. There's an environment where stocks can slightly pull back or stocks can go sideways. We don't have the crystal ball. We don't necessarily know, but it doesn't simply mean because price has gone up, price has to come crashing down. There's a justification for these price movements in the form of fundamental earnings.
Yeah, I think that's fair, right? And we have no expectation for that to meaningfully change next year.